All right, hello, my fellow stock market jobbers. Just want to take a look at SPY and what happened today. And we review SPY and other things pretty much every day, but SPY is definitely something we look at every day. And it's an ongoing narrative. If you get to know the market and you get to know where the important levels are, then you don't need to listen to the media. You don't need to listen to some gurus. You can just let the market tell you what to do because the market talks to us, and it talks to us by how it reacts when it gets to important price levels, all right? Support or resistance. So going back to December, I don't know, 18th, we've been in this range for SPY, a little triangle pattern, rectangle pattern, which is just a trading range. And on the top, we got about 386.50, and on the bottom, we got about 379. So shorter term, those are the levels I'm watching. If you're a day trader and we get up to 386.50-ish, not exactly, but around there, maybe you look for a sell-off or a breakout. On the other side, if we get down to 379, could be the same thing. You get a little bounce or a breakdown. For the longer term traders like myself, I'm what you would call a swing trader. I mean, sometimes I do day trades, but I don't mind holding positions for a few days or a few weeks. And on the downside here, we know markets have memories, right? So there's a lot of times there's support at former bottoms. So if we do break down, I'm going to be looking at 372 for a potential bounce. If we move higher, I'm going to look for 390 for a potential sell-off. Now, this 390 level is important, and I just want to point out something here. It was a support level, and a lot of times support can convert into resistance. It's one of the most important things to understand about trading is how these levels can switch back and forth from support to resistance. So here we can see it was resistance and support, and now maybe resistance again. This happens because there are people here who bought, and when the price went lower, they regret doing so. So they tell themselves they want to sell, but they don't want to lose any money. So they say to themselves, if I can get out at break even, I'm going to. And they place their sell orders at the same level they had their buy orders at. And you've probably done that. Be honest with yourself. Here we have resistance becomes support. This is seller's remorse. Investors sell, and when the price moves higher, they regret doing so, and they tell themselves they're going to buy their shares back, but only if they can get them for the same price they sold them at. So they place their buy orders at the same level that they had their sell orders at. So short term, we got the levels I just mentioned. More intermediate term, if we're looking for a new leg up in a new bull market, it's not gonna it's not gonna happen until S&P gets above this important 390 level, and I don't suspect it will. I mean, you could always check back at stockmarketjobber.com. But here we see one of our principles of markets is that some price levels are more important than others, and this is a perfect example. Why does S&P or why does SPY like the 390 level? I have no idea. I really don't know. But I don't know how electricity works, but if I flick on my light, I know it's going to come on, right? So, all right, I'm being a little facetious. There's resistance here because it was support here. So this is an important level because of the buyer's remorse we just talked about. Now, why did the market first bottom here? That I don't know. Then we can see that what was resistance becomes support because of the seller's remorse we talked about. And then resistance becomes support, and that brings us up to where we are today. So the point is that I'm going to make is that this 390 level is an important level. So maybe the market trades higher, but we're not going to make a significant move in the broader market until this resistance gets cleared, and it's probably going to be pretty significant. So I don't expect it to happen anytime soon. Also, if we're just talking about price levels, look at this, right? A lot of us were able to sell around the 408 level because the market stalled out where? At a former resistance level. This is market memory. Levels can stay intact. If you look close, you'll notice this was also a support level. So support becomes resistance. Some levels are more important than others. Sometimes we know why, sometimes we don't, but we don't need to. We just need to know that they're there. And you can use this to understand where to place your orders and where to have your buy orders kick in, where to have your sell orders kick in. All right, so that's just a quick look at SPY. So check in tomorrow if you want to take a look again. And just, it's an ongoing narrative. If you watch the market every day, like I have for the last 25 years, it starts to become second nature, and that's where success comes from. All right, thank you, everybody.